So today we'll have a look at a Tokyo session trade where we ride the trend, we enter on a very tight entry, we put a very tight stop loss, ride the trend, and go into the London session and kind of ride the whole move from Tokyo to London, getting in early and getting off when London is at its full potential of trending markets. So we'll go through that. I'll give you my thoughts on how to trend trade, a few more tips you can use also. So we'll dive into that trade right away. Before we start with this video here, if you want to see the whole strategy and details and the rules behind them, I've put a whole training that I've done before. You can check out. I'll put in the link over the top of this video. You can directly go and watch it. So check out the link above, or it's going to be below in the description of the video. You can just check out this link. It'll have a lot of good details and you can see all the rules about the strategies and how it works out, some background. I'll go through the background very quickly here in this video because I want to go through this trade, give you some more tips for trend trading. But if you want to see the whole rules and the whole strategy, check out the link below, watch this after, and you'll be able to learn the strategy in details from start to finish. Alright, so the way this strategy works is we need to identify the pre-market action. So the pre-Tokyo session, so for me it's around my 4 a.m. to around my 7 a.m. Bangkok time. I won't look at the market here, but I kind of have this on my chart in retrospect. I look at what the price did in that range. And we know basically if after this market open here in Tokyo, which is around here, okay, in purple here will be the Tokyo session. If the market is staying within that range that was before over here, then we're not doing much. It's going to be very boring. We cannot really trade that kind of back and forth. We could maybe scalp it, but it's very hard to make money trading these tight ranges here on a 5-minute chart. Instead, what we care about is having breakouts. If we break out of this range, if we go over here, if you go down there, then we have room for some profits. We have a lot more momentum and a much better ability to ride the trend in that case. Again, this is going to be pre-Tokyo, but then we really want to be able to leverage Tokyo as well as after this, which is the London. And London starts, you'll see later in that chart. We'll go through this, but London brings in a lot of momentum, a lot more volatility. Price goes up a lot faster or goes down a lot faster, and we can really capture some big moves into London. Sometimes we take a trade in Tokyo, then it continues into London, and that gives us a very big move, which we'll see here on the chart in a minute. Okay, so we let price advance here on the chart. We have price reaching the low of a range, but until we have a close below that range or above that range, we really don't have any kind of potential setup. We have anything could happen, right? Here, price went down. Sure, it could go back down, but chances are it will go back up and do anything, stay in the range, because we didn't have a clear break of that range over here. Now, this is a much more advanced chart, but we've got here the wick we're looking at, or over here. Didn't do anything, just make a wick, went all the way back up. But then we have a breakout on this side of the chart here. See how this candlestick here break the range? You could say, or if you want to be more obvious, then this one here break the range, right over here. And that confirms to us a real breakout, because we have a clear close outside of the range. Now you know that breakouts come in with a lot of fake outs too. Or price breaks out of the range and then it goes back straight down to within the range, and that's not good. So I've got a simple way to avoid this when I trade this strategy. I basically wait for a pullback, and the way this works is I want to have price making, of course, new highs, breaking the range, clear break of the range, which we clearly had on this chart here, but then we see price makes a new high. Now my rule is I want to wait for price to not make a new high on these next few candlesticks, and you see it happens right over here where this bearish candlestick here makes a high that's right here. And it closes all the way here, right? So that's a pullback. In the case of a fake out, price would probably go right back down to here, and we would never see that upside here of the chart again. But in the case of a breakout, price will just make a pullback and come back to go on the other side from that pullback, right? This is very important. This is why I wait for this one candlestick kind of trick. I wait for this small pullback and then enter a little bit later on that move, and I get a lot better results that way. So my way is then we'll enter right above the high once we had that pullback, and we'll maybe take an entry right over here, and we'll be able to ride that trend if price goes there. If it doesn't go there, we cancel the order, and that's all good. I'm totally fine with that. Okay, stop loss will go over here below this low, which is what my scripts says here. You see it puts it a little bit lower, but you can put here below the low. I always want to be more aggressive because we have a clear break on this candlestick right here. Then you can put your stop loss over here if you want. very much more aggressive, but it would give you a very good reward to risk. It's up to you. Both ways work. I'm going to go here with the conservative version, the classic version for this trade example, but you can do it either way, conservative or aggressive. Now this is how it went. Our entry was just above the high over here, got triggered right somewhere around here, this one, and our stop loss was below over here. Now the key thing here is I have a lot of people who want to move the stop loss to break even quick. They want to be able to kind of catch on the move. They want to be able to protect their downside, and that's a very, very good point. But at the same time, it's very risky to get in the move, get stopped out, and then you miss out on a big part of the move afterward on that kind of strategy, because you have less momentum in the early Tokyo session, right? This is a lot less momentum here and here than when we get to London later over here, okay? So that's the key thing, is we could move the stop loss here. Maybe price will come back down and chop us out to that trade. That's not good. Especially in these pairs like JPY, LDJPY, they have a lot of wicks, and these wicks can stop you out very, very easily. You have big wicks that don't really mean the price will go there. They're just basically price coming back and forth, and the buyers and sellers coming back and forth, but they could stop you out easily on the wick on these kinds of trades. So my way of doing it is I like to have different orders. I'll have a order with a target at 1-to-1, my 1R. I'll have maybe a 2R, and if I feel good, I'll have a 3R. If I feel like it's very choppy and not moving well, or it's like my third trade of the day and it's not working well, I won't have a 3R. I'll be a lot more conservative with my targets. But if I feel like I can go for a 3R, if it's like late in session do like this, especially like we have London starting soon, somewhere over here, then I'll be more flexible and try to target a bigger move than if I were to take a trade here, or maybe somewhere here and it kind of go down and then goes back up. We can just do a 1-to-1, then I'll be much more conservative here. So that's how it works out. Again, I split my trade in 3 parts. I'll have 3 different trades with different take profits, and I split my risk in 3 parts too. Okay, so here's how it works out. Now, we entered right over here, above this high, was triggered somewhere around here, our stop loss is around there, and we target our first 1-to-1, boom, okay, 2-to-1 somewhere here, 3-to-1 somewhere here, and then boom. That's kind of how it went. Now, I want to make it clear, again, if you move a stop loss to here, which I told you not to do, then you might be okay here, you might be able to not get stopped out there, but then you definitely get stopped out here, and you miss the whole move around here, because you move your stop loss too early. Notice also how we've got a triangle over here. Blue triangle below this candlestick. And that's not to look pretty, it's not just a cute triangle, it's basically a Bollinger Band reversal setup, which if you want to learn all about this setup, I've got a whole training on it. I've got a whole masterclass on my website that goes to the strategy in details, all the rules behind it, trade examples, things you can follow, how the strategy works out to get an edge in the market. It's a really good strategy that works also really well on the lower time frames like this one. I'll get to it in a minute, but definitely get that masterclass if you can. It's 100% free, and you get some good value there and some good teachings, and I think something that will make a difference in your trading, whether you decide to trade this or just stick to your own rules. It's going to help you to see things in a different perspective. But alright, I find that these setup here work really well on these kinds of pairs on lower time frames. 500 charts, definitely a good time frame for these. What they help us to spot usually are reversals in the market, or in this case, a kind of trend continuation. We've got price going up in a very strong manner. Then we've got this setup here showing us that price did its pullback there, and now it's ready to reverse. So the way this works is simple. We enter just above the high of the engulfing candle over here. Our stop loss goes just below the most recent low, which is in this case over here. And now we can target either the other side of the Bollinger Band, which is somewhere here, or we can wait and have a take profit that's a bit more far. I typically have 2 take profits, one at 1-to-1, or the bands on the other side, and then one at 2-to-1, which is my further take profits. Okay, I can do 3-to-1, but in most cases I do just 2-to-1, especially now because we are late in the session. This gives us, first of all, a good way to re-enter the market if we were out in this trade already, the first trade we had over here. If we close this one already, we can re-enter. If we miss this one in the past, we can take that second trade over here. And if we want to get a bit more exposure, let's say we're break even, we can re-enter this one here, add a bit more size on this setup, and ride the trend a bit more on that move. So it's a cool way to kind of add a bit more confidence here that we are going to reverse, go back to the upside in this move. And I like to trade these 2 setups here together. This is what would have happened if you took the trade and rode it all the way to where we are now on this chart. It's a 4-to-1, which is a lot. It's definitely a good reward to risk. Now you will get losses with this for sure, but 4-to-1 definitely pay the bills. they definitely pay for the losses as well. And that's a very good kind of target. Okay, I would typically do only myself 3 to 1 because that's what I like the most. We might have a 1 to 1 here, like we said, 2 to 1 somewhere here, and 3 to 1 somewhere here. And that gives us plenty of room for profit in that case. So that's just the way I do it. Again, if you want to target for more, you can target for more. Then if you take in that second trade, again, you've got an other opportunity for a move to the upside into London. And that's definitely a good way to do it. 4 to 1s are pretty amazing. Again, this one here went a lot further than we thought. But this is something we cannot really control. We cannot predict either how far it's going to go. We have to adapt and kind of play with it and have different targets that gives us a good reward to risk. So if you were to enter here, you've got your 3 to 1, let's say. Then you enter back here. You've got your first target either at the Bollinger Band, which is a 1 to 1 roughly. And then you've got your 2 to 1 somewhere down the line over here to capture that move. Again, these two combined gives you a very strong edge. You've got the one for breakouts. Okay, we've got a breakout here. Then we've got the auto trade, which is more like reversal, pullback. I'm going to call it like reversal. And these two together make it a very strong kind of strategy together combined. Okay, of course you can trade only one of them. You can trade both. You can trade only the one you like the most. That's fine, as long as you're able to capture the move. But this is kind of how it works. We went from a trade with a very tight stop loss. Again, in this case, we didn't have a lot of downside. Price goes up. That's good. Price comes down. We stopped out. We don't lose any more on this trade. We have a small stop loss, and then we're done with it. And we just ride the winners to where they want to go. And that's just how it works. So if you have any questions about how to do this and how this works, the strategies I've taught today, let me know in the comment section below. I want to hear your thoughts as always. If you've got a similar setup, let me know below. If you'd like to learn my Bollinger Band reversal strategy, I have a whole masterclass that is free on that strategy, how it worked, all the rule behind it. You can sign up below over here in the description. I'll put the link for this. And it really goes in depth to all the rules, some trade examples, some things you can focus on. Totally free, so you can start using that strategy if you want. You can kind of see things I do. I like to be very transparent, showing you the real stats behind it. So if you want to have a look at that, definitely do so that you can save some time and learn some good strategies. I know there's a lot of bad stuff out there, but it's one that will definitely make a difference if you follow it and apply it. Make sure to give a like to the video if you liked it today. Subscribe if you haven't done yet. And I'll catch you back here in the next video pretty soon. Ciao.